Hi, my name is Jennifer Goldsby and I'm with Diamond Residential Mortgage Corporation. Today I'm going to chat with you about foreign borrowers and opportunities for them to gain homeownership in the United States. We're going to focus on financing. Mortgage guidelines can be extremely confusing and very complex. When you add an extra layer of complexity, such as when the borrower is foreign born, things can get even more complicated. Hopefully, by the end of this discussion, you, as the foreign-born borrower, will have a greater understanding of what mortgage options are available to you. And if along the way you have any questions, please don't be afraid to reach out and ask. Foreign borrowers number into the millions. And while the statistics on the left pertain primarily to Latino homebuyers, the concepts that we're going to discuss today apply to homebuyers from any nation outside of the United States. Let's take, for example, a study conducted by the Joint Center for Housing Studies of Harvard University. It centered on immigrants' access to homeownership. And that study cited a population of foreign-born persons now living in the United States as having quadrupled since the 1960s. That's 1 in 7 U.S. households having a foreign-born head of household. It states roughly half of these residents have naturalized as U.S. citizens. In that case, they're eligible for traditional financing. But today we're going to focus on the other half, those that have not naturalized as U.S. citizens. Beyond the countries listed on this slide, the U.S. plays host to foreign residents from Haiti, Myanmar, formerly known as Burma, the Dominican Republic, Colombia, Korea, the Philippines, Vietnam, and various European and other countries and areas throughout the world. Regardless of national origin, I apologize for that, flipped a little too quickly. Regardless of national origin, legal status remains a significant factor impacting an immigrant's access to homeownership. And that's going to be the center of our discussion today. Let's take a moment to define foreign nationals. In my experience, I've discovered that not all lenders use the same terminology as other lenders or even the US government when they're describing foreign borrowers. While the US government provides clear and concise direction on the various legal and illegal statuses of foreign borrowers living in the United States, the terms used to describe these borrowers, they differ in the lending environment. This is especially true in what we call the non-QM world of mortgage financing. We're going to dive into non-QM options towards the end of this presentation, but keep that thought in the back of your mind. Not all lenders use the same terminology to describe foreign borrowers. When you are applying for financing, be sure to spell out both your citizenship status and your residence status to your loan officer. Make it clear, both of those things, your citizen status and then your citizenship status and your residence status, so that you make sure you're on the same page. So what is a foreign national? For mortgage purposes, a foreign national is defined as a citizen of a country other than the United States who has not become a naturalized U.S. citizen. Foreign-born residents who have been granted U.S. citizenship, they're referred to as naturalized citizens, and they have the easiest time securing financing for their new homes. There are graduated steps towards naturalization that we'll identify and discuss in terms of securing home financing. For now, let's focus on foreign nationals. They can be classified as permanent residents, temporary residents, or non-immigrants. Sometimes those two categories are exchangeable, and other times they are kind of what's the thought here? They're kind of viewed as separate. And then you've got your undocumented foreign nationals. Before moving forward, it's important to note that marriage to a U.S. citizen, so if you're married to a U.S. citizen, it does not eliminate the requirements to verify that you are a foreign national who's legally residing in the United States. You're going to be required to provide a paper trail. Types of mortgage loans. There are many types of mortgages in the United States, and understanding all of them can be quite the challenge. It's important to lean on your loan officer for guidance throughout the mortgage application process, and be sure to ask lots of questions so that you understand which options are available to you. Maybe you don't have any options available to you at this time. Maybe you have one option, maybe you have more. So make sure you ask lots of questions and you know all of the mortgage options that are available to you. Again, not all mortgages are going to be available to all foreign borrowers. The different types of mortgages available in the United States are conventional, FHA, USDA, VA. I'm going to stop there for just a moment. So those four different mortgage types, those are what we call traditional financing. And then you have non-QM loans. The advantage to using those four first loan types, those traditional financing types, conventional, FHA, USDA, VA, is that you'll have access to the best loan terms available on the market. They require lower down payment options, going market rates, fixed rate mortgages where the interest rate doesn't change and therefore the mortgage payment itself does not fluctuate throughout the mortgage term. They don't have any prepayment penalties, etc. Those are traditional financing. They're also called qualified mortgages or QM mortgages. So again, those first four traditional loan types can also be called QM mortgages. And then you've got like the subsection non-QM loans. If I could add anything to this discussion, it would be to alert you to the possibility of what's called portfolio lending. There are some banks and credit unions out there that offer their own mortgage programs that they keep. Gets a little complicated when we start talking about primary markets and secondary markets, but because those banks and credit unions don't intend to sell their mortgages in the secondary market, they have some flexibility with their guidelines. They can play with their guidelines and make their own guidelines determined by their risk appetite. In the mortgage world, there can be an exception to every rule and an exception to every exception. Again, just be sure to clearly identify your citizenship and residence status to your loan officer and make sure you're asking lots of questions so you understand what type of mortgage or mortgages are being offered to you. Now let's talk about the documentation requirements. You're going to have to provide unexpired official identification to confirm your immigration status, and that includes the document information must include your name, the identification type and number, place of issuance, issue and expiration dates. If the document is dual-sided, there's information on both the front and back, then both front and back copies will be required. However, a copy of the back of the permanent resident card, also known as the green card, is not necessarily required if all of the information that's required for your loan is located on the front. I know it's complicated. I did say there's an exception to every exception, right? If the required information is not on the front of the green card, then you got to provide a copy of the back of it as well. But the front of the green card, it typically contains your name, a USCIS or A number, category, country of birth, date of birth, card expiration date, residence date, gender, and a fingerprint. Temporary residence, also known as lawful permanent residents, green card holders, permanent resident aliens. There are lots of phrases that could be used to describe these residents. The definition is a foreign national who's officially been granted immigration benefits, and that can include permission to permanently reside and take employment in the U.S. Again, these types of buyers, they typically qualify for conventional FHA, USDA, and VA loans. Documentation required is a permanent resident card, otherwise known as a green card, and then you can see the other documents that would be required for financing as well. Temporary residents, also known as non-immigrants and non-permanent resident aliens. These type of buyers, they usually, typically are eligible for conventional FHA, USDA, and VA loans, that traditional financing. Definition is a foreign national who has been officially granted immigration benefits, which include permission to temporarily reside in the U.S. and may include the ability to take employment in the U.S. You can see the documentation that's going to be required. All of those things that are listed on the screen, that's stuff you're going to have to provide to your loan officer. We'll talk about temporary residents from Cuba, Iran, North Korea, Syria, or the Ukraine and some other temporary residents eligible for financing in just a second. I want to make a note here that if you need to retrieve your I-94 electronically, you can do that online. So if you have questions about how to do that, not sure where to get it, reach out, ask us. We'll be happy to give you the link for you to retrieve that online. Temporary residents from Cuba, Iran, North Korea, Ukraine. Typically not eligible for financing unless they meet the qualifications as listed on the screen. An EAD, where you see EAD documented on this screen, that's an employment authorization document. So it has to reflect a certain category code. And there are, other requirements as well. And if these qualifications are met, then yes, these buyers would be eligible for conventional FHA, USDA, and VA loans. You can pause if you need to read through this. I'm going to go ahead and move forward. Other temporary residents. And I do want to give a side note that undocumented foreign nationals are not eligible for traditional financing. Again, undocumented. You're here in the United States, undocumented, not eligible for traditional financing. That includes the conventional FHA, USDA, and VA loans. Your eligibility for financing is going to be dependent on a number of factors: your EAD codes, deferred action status, diplomatic immunity, refugee, asylee status, or maybe in some cases temporary protected status. I actually am working with a gentleman right now who's a TPS resident, and we've been able to secure conventional financing for him. So that can be done. Visas. There are all kinds of different types of visas, lots and lots of types of visas. A visa is a supplemental identification or a travel document that a foreign national generally must have to seek entrance into the United States. It does not guarantee entrance, and it reflects and it does not reflect the length of the authorized stay in the United States or the duration of your stay. If you don't have your visa handy, maybe pause this video and go grab it. Then look for your visa type on the next couple of slides to see if it's eligible for traditional financing. As we flip through these next few slides, we're primarily focused on visas that are eligible for traditional financing. Visa type eligibility, it's determined after considering a number of factors, which may include, but are not limited to, the type of visa, the purpose of the visa, employment authorization, whether or not the individual has the opportunity for a long-term stay in the U.S., and generally a period of stay of more than 2 or 3 years is acceptable while evaluating extensions or your path to a green card. And take note that the temporary residents from Cuba, Iran, North Korea, Syria, Crimea region of Ukraine, and others, they have different requirements. So there may be some additional requirements for residents from those countries. Again, if you don't have it handy, pause this video, go grab your visa. Then look for your visa type on the next couple of slides to see if it's eligible for traditional financing. If it's not, don't despair. We may have a solution for you that we'll talk about towards the end of this presentation. But if you have a visa that meets any of these requirements, any of these categories, then you should be eligible for traditional financing. I've got one more slide to go, so pause if you need extra time to read through this to see if your visa is eligible for traditional financing. Okay, that wraps up the list of visa types that are eligible or not eligible for traditional financing. Now let's chat a little bit about ITINs. You got social security numbers and you have ITIN numbers. A social security number is required when a foreign national is earning wages in the U.S. or for a U.S.-based employer. So if you don't have a social, again, don't despair. We may have some options for you we'll talk about towards the end of this presentation. But in terms of traditional financing, in terms of legality, if you're here, you're a foreign national, you're earning wages in U.S. currency, or you're working for a U.S.-based employer, you should have your own social security number. An ITIN is acceptable when it's used for purposes of reporting taxes from passive income sources only, not employed in the United States. ITIN numbers, or individual tax identification numbers, those are issued by the IRS and can be used as a form of ID. They are issued to U.S. residents, permanent residents, or temporary residents, and to their spouse or children. They're not just for residents or non-resident aliens. They can be issued to anyone who files a U.S. tax return and has payout responsibilities or payment responsibilities. Non-QM loans for ITIN home buyers are uniquely designed for individuals without traditional documentation. So if you don't have a social security number and you are working here in the US, we can explore non-QM financing for somebody who only has an ITIN number. Applying for an ITIN is relatively straightforward. You can get an ITIN by applying for it, and the processing time for receiving it is relatively short. In addition, no social security number is required to receive an ITIN. The first step is going to be to fill out a Form W-7. That's an application for IRS individual taxpayer identification number. Go to the irs.gov. You can also contact the IRS at that number there, 1-800-829-1040. You may need to provide additional documentation as part of your application, including identification documents. That could be an ID card, birth certificate, driver's license, medical or school records, along with your W-7. The more identification you can provide, the easier the application process is going to be, or at least the easier it will be to process that application. I don't know about the process for you. Hunting down those documents may be a chore. The processing time varies for receiving ITINs, but generally our experience has been that individuals typically have an outcome to their application within 4 to 6 weeks. Beyond legal status, foreign-born buyers face other challenges, such as documenting their income in the traditional sense. By traditional sense, I mean using tax returns, showing us with tax information, tax documents, how much you earn. Many foreign borrowers are self-employed. And take that out of the equation, regardless of citizenship status, whether you're a US citizen or not, being self-employed presents its own challenges when you're trying to secure a mortgage. For example, it makes sense that when you go to file your tax returns, you're going to want to take as many deductions as possible to reduce the amount that you have to pay in income taxes, right? But doing so can impede your ability to borrow money to buy a home. So for this reason, and maybe others, tax returns may not show a true depiction of your actual income. So there are loans that allow alternative income documentation methods. I'm referring to those non-QM loans that keep surfacing in our discussion. Non-QM loans can allow a buyer, home buyer, to use P&L statements, personal or business bank statements, 1099s, or maybe you have enough assets to qualify for a mortgage instead of, again, those more traditional methods of providing full personal and business returns. And that sounds great, and it is, but that flexibility does not come without a cost. Non-QM mortgages often come with higher than market interest rates. They can be significantly higher. So you're not going to, if you cannot prove your income from traditional methods through tax returns, you're not going to qualify for market interest rates. You're going to be looking at higher interest rates because higher risk comes or is associated with a mortgage that's secured by someone who cannot prove their income through traditional means. Those non-QM loans, they typically demand larger down payments as well. Think 10% down, 15% down, 20% down, maybe even more. They require higher credit scores. So you have to have good credit, more money down, you're paying more interest. Again, these flexible loans, they're fantastic for what they're needed to accomplish, but they do not come without cost. Non-QM lenders, they often impose minimum loan amounts. So if you're trying to buy on the lower end of the spectrum, a lower price range, say less than $100,000, that could be a problem. They may or may not be able to offer financing for those lower loan amounts. And non-QM lenders, they may or may not be able to offer fixed rate options. So it's possible that your mortgage payment would be subject to change if you stay in the loan long term. Non-QM loans are not going to offer the most favorable loan terms, but they can help you get the job done so that you can get your family into a home. They have other benefits as well, from the perspective at least of qualifying for a mortgage. If you are an ITIN borrower, then a non-QM loan may not require the use of a credit report or may allow us to redact any conflicting information. So let's say you have a fake SSN, a fake social security number, and it shows up on your credit report, we can redact that on the credit report or just omit the use of a credit report altogether. Non-QM loans can allow for the use of bank statements to prove income or other types of, I mentioned a few, P&L, 1099s, etc. We might be able to use a verification of employment instead of using pay stubs and W-2s. You could potentially get your down payment as a gift from a family member. You can use that towards your down payment and your closing costs. And there are some options that are available. We'll call them no questions asked in regards to immigration status. So if your visa has expired or you have no legal approval to be in the US, we can explore some of those no questions asked, non-QM options for ITIN borrowers. There are documentation requirements, of course, as there are for any mortgage. You're going to be required to document your identification through an ITIN card or maybe a letter. Typically speaking, minimum credit score is going to be 680. So your credit has to be 680 or higher. Kind of expect that going into it. Any no credit score options, let's say you have no credit history whatsoever, just kind of go into that assuming you're going to need 25% down or more. You'll need to be able to document your last 6 months rental or mortgage history. Single family residences are typically allowed, as are condos, townhomes. But if you get into any of the more unique types of housing, may not be allowed on the non-QM side for ITIN borrowers. Minimum down payment, be prepared to put 20% down. And if you're buying land or a lot, even more. Non-occupant co-borrowers might be allowed in some instances. Usually those non-QM lenders who allow it, they want an extra 5% down. So if you qualify on your own, at least from the perspective of your status, for 20% down, but maybe from a debt to income perspective, you need a non-occupying co-borrower, then you're going to have to put 25% down in that instance. And they're going to want to see 2 years consistent employment history. So while they may not ask for the traditional documentation, they're going to want to see the employment history. That gives you a little bit of color on what non-QM loans are going to require. Maybe the last thing I could add to that is that they're going to limit how much you can spend. So whatever your gross monthly income is, you can expect that no more than 55% of that would be allowed to cover all the debts that you have, including your new mortgage. So let's talk about a couple different scenarios before we close. We're going to consider some recent situations where we were able to help foreign borrowers secure mortgage financing to purchase a new home in the United States. First one, and we're going to call him Joe Rodriguez. We've changed the names of these buyers and then the names of their employers just to protect confidentiality. So Joe, independent contractor, he'd been receiving a 1099 for the past 3 years from his employer. He worked in cleaning services. He had an ITIN number, and he filed his income tax returns using that ITIN number. He didn't have any established credit history on his credit report, but he was able to provide the last 12 months bank statement showing proof of his income and his expenses, his liabilities. He qualified for a mortgage financing with 25% down and was able to purchase a home using a gift from a family member that covered 10% of his down payment. So he fronted 15%, family member popped in with 10% to come up with 25% down in total. So that was our first success story. The second one is Lisa. Lisa is a temporary resident with a salaried position. She's a W-2 employee, and she uses her ITIN number to file her income tax returns. So she doesn't have a social security number. She did have an established credit history with a 700 credit score. So she was able to secure financing by putting 20% down on her new home. Wonderful success stories. Your particular situation does not have to fit one of these, perfectly. As we mentioned previously, there are lots of instances where we can make something work either in the traditional space or in the non-QM space. If you have any questions, you can contact me at 844-736-6425. We hope this helps to simplify or explain the mortgage types that you would be qualified for as a foreign borrower. We invite questions if you have any.